Welcome to Market Views, a show that delivers an in-depth analysis of Zimbabwe's equities market. Today, we want to look at the performance of the Victoria Falls Stock Exchange. So basically, we invite expert analysts to join us so that we unpick key fundamentals and technical trends revolving around our local capital markets. So joining me on set today is Ian Banda. Ian, welcome.
Thank you, Kuda. It's nice to be here.
My pleasure. Now, Edgars reported a 9% decrease in the top line, which is the revenue. But in contrast, the bottom line, it actually surged by 14.5% to about 854,000 US dollars. So, firstly, can you kindly share your overall sentiments on the performance of Edgars?
Okay, thank you for that question. So Edgars actually showed a resilient performance in a tough economic environment. We noticed that the revenue declined by at least 9.3%. This was a result of reduced consumer demand. As you know, like we are currently facing economic hardships, and many consumers are prioritizing
cheap alternatives.
Not exactly cheap alternatives, but we have what we call immediate needs, not concessionary spending. So you see that people focusing on buying food, you are paying for your shelter and all that. Things like apparel and footwear, they are list of your priorities at the moment. Also, there is cheaper alternatives like you alluded to, what we call mabel or second-hand clothing, and also the flea markets. There's the advent also of Shein, that is
that online
platform that is proving very competitive to Edgars. Then also we have macroeconomic issues, like we have the currency, inflation, exchange rate crisis that we have. But at least for the most part of this year, well, we have seen some stability, but last year we saw that our local currency lost a lot of value.
In September.
So I think, that affected Edgars' revenue. Also, not forgetting the drought we had. So a lot of farmers, we are an economy that is dependent mostly on agriculture as well. So we see that a lot of farmers had reduced disposable incomes as well. So I think that's what affected the revenue. But overall, we saw that net profit, at least it improved by 14.5%. How did that happen? If we look at the cost of sales, they reduced by about 2 million. And also, if we look at the other expense line, the operating expenses also, I think it reduced by about 1.7, 1.8 million, somewhere there. So we noticed that there was some cost curtailment strategy that Edgars went into. On the cost of sales, they increased manufacturing from their local unit Carousel. We saw that local manufacturing from their plant increased by about 57% to 305, 308 somewhere, the 1,000 units produced from their factory, which was a welcome move. So I think that's what buoyed the net profit margin.
Okay, thank you. That's a good analysis. So if a layman is to ask you to say, can you please unpack what that entails, that a company can actually record a decline in its top line, but in contrast, you see the bottom line surging by 14.5%. Let's say somebody is to ask, what could you possibly say?
Okay, I would simply say, I would just give an example, an analogy.
Yeah, sure.
Let's say I was earning $100, and this month I managed to earn $80. When I was earning $100, I used to order takeouts.
Yeah, sure.
Then when my income dropped to $80, I decided to say, let me stop ordering takeouts. Let me cook at home. And by cooking at home, I managed to save more money. On my reduced income.
So that's
I managed to save more. So it's an issue of cost curtailment in terms of Edgars. We saw them rationalizing their costs by not importing and focusing on local production and their manufacturing arm Carousel, and also reducing some expenses in operating expenses and also on the cost of sales line.
Thank you. Well, now let's perhaps shift to the main boss, the Victoria Falls Stock Exchange. Now, if you are to look at it as a main boss, right, it was established in 2020 to kickstart as an offshore financial center, right?
Yeah.
But we've seen that in terms of liquidity has been subdued here for the past years. But of course, for this year, we've started to see some bit of improvement in terms of liquidity. Of course, it's subjective whether that's sustainable or not. But looking year to date, we saw the greatest monthly, biggest monthly turnover being in February, when the boss recorded about 40 million. Of course, there was that once-off trade, right, that took place when First Capital Bank exchanged hands of about that 40 million. And second to that, we look at January. It was the second month that recorded also a high turnover. When I think total monthly turnover was 11 million, and it was buoyed by the 9 million nut foods,
Yeah,
which
nut foods
delisted, right?
delisted, yes.
Yeah, but overall, over the other years from March to date, an average monthly turnover was around 3 million. So, well, if I may ask, just share your thoughts and your sentiments about the liquidity status of the Victoria Falls Stock Exchange.
Okay, thank you. I think the Victoria Falls is yet to develop into a deep and liquid market. Why is that so? We only have about 13 counters that are not really diversified that much. So the other issue also is we have limited retail investor participation.
Yeah.
I think we have a single digit in terms of
contribution.
In terms of contribution by retail investors. Why is that so? A lot of retail investors, I would want to believe that they haven't been properly educated about the Victoria Falls Exchange, like the awareness around the booth. It's mainly institutional investors who know and appreciate the Victoria Falls Exchange. Then also bring it back home, the situation we have in our country is everyone prefers to save their income in USD.
Mattress banking.
Yeah, mattress banking. So we have a few people who actually understand that it can be also a saving mechanism by investing also on the boost.
Okay.
Yeah, because if we look at the economy, about 80% of the transactions are happening in USD, which means that the USD liquidity is available.
Yeah.
But do people know the advantages of actually also putting that USD liquidity on the VFX? I doubt we really know the full advantages of that. So we find out that most participation is from institutional investors, and we have limited retail investors. And I would like to think that if the market also gets more listings and less migrating counters from the ZSC, but actual new listings that are coming on board, I think it would improve the appetite.
Yeah, I do agree with you there, because recently we saw gold prices rallying, and I'm sure if people were more informed, that was a perfect time for a lot of people actually to trade on Padenga.
Yes.
Because look, interesting things that happened. As I was analyzing, I saw that at some point it was interchanging the second position on market weight with INSCO for the first time.
Yes.
Right? So I do agree. But on that listing issue, we saw REIT listing on which was VFEX first REIT listing, listed on 16 May, actually last month. And so we can officially say it has now reached a month listing there on the Victoria Falls Stock Exchange. I mean, just looking at that, can you make a commentary? Firstly, from a market development perspective, and then secondly, from an investor's point of view.
Okay, to answer your first question, I think it's a welcome addition on the Victoria Falls Exchange. On a market development perspective, it signals that the VFX is not just a platform where we see counters that are decided to migrate from the ZSC come and stop there.
As it had been the case for the past
which has been the case for the past few years. In fact, since its inception. Yeah. So we now see new listings, which is a welcome development, and also it's a REIT.
Yeah.
So it means that the market is diversified in terms of new instruments and structures offered. I think if we have another ETF coming on or another REIT, I think
the market
breadth improves. Exactly. Then from an investor perspective, it's a welcome thing as well, because investors want a diversified portfolio. Sure. And a REIT actually gives you, what can I say? It gives you exposure to the real estate market.
As we've seen in the past years, the property market gaining a lot of traction.
Yes, the property market has been gaining a lot of traction. But why is that so? In a period of economic uncertainty, the real estate sector is a sort of a hedge for a lot of people. So we have seen a lot of investments in the real estate sector, and also the exposure to hard currency earnings. REITs are mandated by law to actually give back about 80% of their income as dividends. And as an investor, you are sure that you are getting a hard currency dividend. We saw it with Tigere on the ZSC. Every quarter, a dividend is coming in. So those people who are looking for a continuous flow of income, you are guaranteed to have that continuous flow of income every quarter.
Wow, thank you. Well, we know, and even ourselves would like to go on and go on and go on, but I think for today, let's end here. Thank you so much for being with us, and we do hope that even in our next session, you are going to grab your seat and take a seat and then just join us as we have these discussions. Thank you so much for joining us, and just before we sign out, allow me to thank Ian. Ian, thank you so much.
Thank you.
I'm sure even our audience are going to be happy, and they found some of the things that you were sharing quite useful. So thank you so much. And our audience, yes, to wishing you a fruitful week and a productive day. Do enjoy the rest of your day. From myself and the crew behind the scenes, we thank you and we say bye for now.